a certain iron condor. And depending upon how the stock or the index moves, we layer additional iron condors on top of that. So there's many ways you can do it. My friend Mark's method is you put all the layers all at one time, whereas I find that a little too risky, because even though you're putting these iron condors at different strike prices, what that does for you is it spreads your risk across many strike prices. So let's say if Apple was trading at 600 and we have a bear call spread at the 650 level, and we have the protection call at 660, and on the put side we have a short put at 550 and a long put at 540. So what you could do is layer another iron condor on top of this. Perhaps what we'll do is maybe move the 660. Perhaps what we'll do is we'll put a 650, 680 to begin with, and then we put another condor at the 660, 690 level, and then another one at 670 and 700 level. And on the put side, what we can do is we'll start off the bull put spread at 550 and 520. Then we'll put another bull put at 540, 510, and then a third one at 530 and 500. So you have three iron condors on top of each other. So what that does is it spreads the risk out on both sides. So, if you look at the bear call side, you have a strike price, you have a short strike at 650, you have a short strike at 660, and you have a short strike at 670. And on the put side, you have a short put at 550, 540, and 530. So instead of taking a sharp turn downwards at one strike price, what this does is it sort of evens out, it smooths out that curve, and it gives the iron condor a lot more room, and it's a lot more forgiving in terms of your risk profile. So that's what the Theta Max strategy, the base case of that strategy is. What I do is I wait for a movement on either side. So once you wait for a movement on either side, then I prefer to leg into that side. So let's say the stock moves, if Apple moves from 600 to 610, then at that point I'll leg into the 660 short call. And if Apple moves this side, then I'll leg into the 540 short put. So if Apple goes down, then I'll leg into the 540 short put, and I'll leg into the 530 as well. So, there are pluses and minuses of both methods. In my friend's method, it's you don't take a risk in terms of any kind of whipsawing that might happen. And in my case, the way I do it, there is a slight bit of risk of that happening. However, what we can do is we can control that risk by just putting on small positions and sort of managing that whole process. So we could do that. And then the other good thing about this trade is it's also designed to be a continuous trade. So if you put all these iron condors in 1 month, well, you don't have to put all these iron condors in 1 month. You can layer these condors into different months as well.